On July 17th, 2026, a Chinese AI startup nobody in mainstream finance had heard of released an AI model, and the US semiconductor index fell roughly 10% in a week.
Oh no.
It's about damn fucking time. The model is called Kimi K3. It's made by a company called Moonshot AI. To the moon, baby. And it's the second time in 18 months that a Chinese lab has done this to US tech stocks. The first time, Nvidia alone lost almost $590 billion in a single trading session. Wall Street called them both deep-seek moments. The name is telling because the actual question these events keep raising is not really about AI. It's about whether the most expensive investment thesis in stock market history is built on an assumption that might not be true.
Now, what is this assumption that I'm presuming?
For the last 3 years, US markets have been pricing in one central belief: the frontier AI requires frontier spending. Big boy bucks for the big boy companies that really aren't turning a profit. And that companies selling the infrastructure, Nvidia above all, but also Broadcom, Micron, the cloud providers, the data center builders, are the toll roads on the only path to the future. The numbers behind that belief are retarded. Nvidia's market cap hit $3.5 trillion earlier this year. Meta, Microsoft, Google, and Amazon combined announced over $300 billion into AI capital expenditure for this year. The entire edifice of US tech valuations in 2025 and 2026 rests, to a significant degree, on the assumption that this spending was actually necessary, that you could not build a competitive AI model without burning through billions and billions of dollars worth of the most expensive chips on the planet. DeepSeek questioned in January 2025, and what Kimi K3 has now questioned again is whether that assumption is correct. And I'm gonna make the educated guess and say, yeah, they're correct. Now let's look at the previous open source AI model and what that actually did to the
US market.
January 27, 2025. DeepSeek, a Chinese AI lab funded by a hedge fund, releases its R1 reasoning model. It is competitive with OpenAI's best models. It was apparently trained at a fraction of the cost. Just on the release of this new model, Nvidia dropped 16.9% in one session, close to $590 billion of market capitalization completely erased. CNBC calls it the single largest single-day market cap loss in financial history. The Nasdaq falls 3.1%, the S&P 500 falls 1.5%. The market does recover within weeks. OpenAI, Anthropic, Microsoft announced enormous new investment rounds. Nvidia's stock climbs back. The capital expenditure plans do not slow whatsoever. The conventional wisdom reasserts itself. DeepSeek was impressive, but limited. A distraction. The spending thesis remains intact. That interpretation may or may not be correct. What is not in dispute is the market's reaction to DeepSeek is definitely established. It was played out exactly how we thought it would. They lost a fuckload of money, but then they gained it all back. Now, let's actually look at the bare bones of what Kimi K3 is and why this could be absolutely detrimental. Moonshot AI was founded in 2023 in Beijing. It raised $2 billion in May 2026 at a valuation above $20 billion, backed by Alibaba and other investors. Its flagship product before this week was Kimi, a consumer AI assistant popular in China. Kimi K3, released in July 16th to 17th, 2026, is a different category of thing. 2.8 trillion parameters, the largest OpenAI model ever released in history. Mixture of experts architecture, meaning only 16 out of the 896 expert networks active per interface. The model is massive in total, but relatively cheap to run at any given moment. 1 million token context window, native multimodal support, text, images, video, and critically open weight, meaning the full model weights will be publicly available. Free to download, free to self-host, free to modify. And the competitors are closed sourced, so you cannot modify, you cannot self-host, you have to pay to use it. But Kimi K3 breaks that fucking boundary, yo, and says,
hey, here's it for free.
On benchmark tests, Moonshot claims it matches or outperforms GPT 5.6 and Claude Fable 5 on several metrics, with particular strength in front-end coding, where it topped the independent chatbot arena coding leaderboard at 1679 points. Now, I'm not even going to begin to know what that means, but yeah, fuck it, that sounds pretty good. Artificial analysis placed it at an intelligence index of 57, ahead of several leading proprietary models. The API price, $3 per million input tokens. The equivalent from OpenAI or Anthropic runs 6 to 10 times higher. This is a near frontier model available to anyone with an internet connection. Roughly 1/8 the price of its closest US competitor. Definitely a fucking market disruptor. Now, I'm gonna argue for what makes this different from DeepSeek, and there is a bunch, not just including what I just said before, meaning that it's probably the most powerful model to ever release and it's open source and it's fucking sick. The market immediately compared Kimi K3 to DeepSeek. I reached for the same trade to sell NVIDIA, sell chips, sell everything downstream of expensive AI infrastructure. Bloomberg analysis published a day after the release argues that the comparison is doing too much, okay?
You're doing too much.
DeepSeek's disruption was specifically about training efficiency. The claim that you could train a competitive model using far fewer chips than the incumbents spent. That attacks the capital expenditure thesis at its absolute core root. If training is cheaper, you need fewer NVIDIA accelerators, you build fewer data centers, meaning this overspending was wildly inefficient. Kimi K3's disruption is completely different in my opinion, and also I think objectively. The model is 2.8 trillion parameters, enormous by any standard, and it places heavier demands on memory infrastructure, specifically high bandwidth memory chips than prior models. It is more efficient per interface than you might expect for its size, because the mixture of experts architecture, but is not making the case that AI can be done on the cheap. It's making the case that a Chinese company can build something near frontier, open source it, and price the API at a fraction of the US rates. I mean, you can say all you want about China, but that's fucking sick. Question for markets is subtly different. With DeepSeek, the fear was that the hardware build-out was unnecessary. With Kimi K3, the fear is that the hardware build-out is absolutely necessary. The Chinese are doing it too, and once you have the hardware, the model is open and free, which destroys the pricing power of US closed models, not the demand for the chip. These are different problems for different companies. The market sold both of them anyway. So basically what you can gather from all of that is that there is no point in selling the chip manufacturer's stock. It's to sell the fucking AI companies who are building these inefficient AI models. Now, what was the reaction from the stock market from Kimi K3? By the close of July 17th, 2026, NVIDIA, Micron, Broadcom, and other semiconductor names were all under massive financial pressure. The VanEck Semiconductor ETF, which tracks the sector, fell below its exponential moving average support band for the first time since April, extending a route that put it more than 20% below its late June record. The semiconductor sector index fell roughly 10% over the week. Oof. Market strategists were divided on how to interpret this move. Mark Hackett at Nationwide Mutual pointed that the structural conditions underneath an already over-concentrated positioning in recently surging tech stocks, record levels of leveraged ETF and margin trading, and elevated retail call option buying. In that environment, a catalyst does not need to be catastrophic to trigger a significant sell-off. The market was absolutely jacked to the tits, and Kimi K3, just wanted to jiggle them a little bit. Now, the question is will this recover like the DeepSeek, disruption did? Okay, let's look at the strategies behind this. Okay, let's step back. Okay, from the stock market noise just for a moment, because there is a structural shift happening underneath all this volatility. US AI companies, OpenAI, Anthropic, Google, DeepMind, have largely kept their frontier models proprietary. You pay per token. You do not get the weights. You cannot self-host. Chinese labs, DeepSeek, Z, AI, Quen, Alibaba, and now Moonshot have consistently released open weight models. You get the weights, you download them, you run them on your own infrastructure, and the API is cheap. This is not altruism, okay? Open sourcing a model that competes with expensive closed models is a competitive strategy. If developers can get 80% of GPT 5.6 capability for free, self-hosted, and switching the cost and moving away from OpenAI or Anthropic drops nearly zero. The Chinese labs are not trying to monetize the model in the same way. They are trying to commoditize the model layer and compete on an ecosystem, infrastructure, and national strategic position. For enterprise buyers, this matters today, right? DoorDash, according to the reporting, already uses Anthropic for most of its complex workloads, and Moonshot for less resource-intensive processes to cut costs. This is not a story about Moonshot winning, it is a story about the pricing power of US closed models starting to erode. Now, let's look at actually what changes from this release. All benchmark numbers here come from Moonshot's own model card and select a third-party evaluation valuations. Independent replication at launch does not exist yet, so we actually don't know if what they're saying is true. AI capital expenditure has not slowed whatsoever. The hyperscalers are building data centers at the pace that suggests that they have not been persuaded by DeepSeek Kimi K2 or Kimi K3 that hardware is unnecessary. After DeepSeek, the stocks recovered because the investment plan did not change. That may not happen again. What is recovering is the pricing premium for closed frontier models. Each release from a Chinese lab at a fraction of the price makes it incrementally harder for OpenAI and Anthropic to justify charging $10 per million tokens when the competitive open model charges $3. The moat for these models itself is narrowing in the way that the moat for the infrastructure is not. The AI bubble I previously made, which link above, is about asset prices running ahead of demonstrated earnings. This is a completely different point. The hardware build-out may be entirely rational. The capital expenditure may eventually each return. The stock valuations may still be overstretched because those returns are too far in the future, too uncertain, and priced at multiples that assume everything goes right. Kimi K3 is not proof that the bubble has popped. It is one more piece of evidence that the moat everyone assumes surrounded US AI might be a feature of 2023, not 2030. Now, here's my personal opinion on what to actually watch and what might occur out of all this kerfuffle. The indicators that actually might matter in the few months are in this order: NVIDIA earnings and forward guidance. If data center revenue guidance drops, the market's entire AI capex thesis is at risk. If it holds, then DeepSeek recovery script repeats and nothing happens. Hyperscaler capex announcements. Microsoft, Google, Amazon, and Meta all have committed enormous AI infrastructure spending. If any of them publicly revise down, that is a great signal. None of them have done that yet, so watch out. OpenAI and Anthropic pricing. If they respond to Kimi K3's $3 API by cutting prices, the moat was already eroding. If they hold prices and lose enterprise share gradually, the model layer business gets more interesting to watch, so keep in mind for that. The biggest thing is waiting for Kimi K3 to actually release. Moonshot said that full weights are due later this month. If the weights release and the independent benchmarks confirm their claims, this case strengthens. If they do not, or the independent numbers are weaker, this week's sell-off looks like a major overreaction. The last point is the one I would probably sit on the most. The DeepSeek release recovered. The assumption that a frontier AI requires frontier spending has survived two alleged disruptions. I mean, history is not really a great representative, but it may survive this one. But two things are very, very true. The US AI industry's pricing premium is under structural pressure from open weight Chinese competition, and markets have demonstrated that they will panic and ask questions after every single time this happens. Now, this video is mainly about a thesis around how investors sort of behaving around AI, which is a very interesting story, I think, and very relevant to this current situation we're in. So hopefully you guys enjoyed this video. I've got more videos on AI disruption and index pricing. Keep it real. Love you all. Hit that sub button.
Bye.